Hi guys, this is Mandeep, and I'm going to do a tutorial today and walk you through on how to size your stock positions appropriately. Now, I know a number of you in the stock board, stock twits room asked me questions that they have certain positions that they bought at reasonably high prices, and now they're down a huge dollar amount on those positions, and what should they do at this particular stage, right? So what I want to cover is that you should first of all never get into that situation. And the reason for that is that before you actually buy a stock, you have to be first willing to undertake what your risk is for that particular trade. How much are you willing to risk on that trade? Whether it's based on a dollar amount, it's based on a percentage drop, or you like to base it on technicals. You use support and resistance levels, and you say if it goes below this particular support level, then I'm going to take this trade off. More importantly, how do you actually, figure out how many stocks you should buy? And that's really based on a number of different factors. And what I'll do is I'll show you a spreadsheet on how to calculate this, and hopefully I can upload this spreadsheet along with the video, and you guys can use it as you feel is appropriate, right? So first of all, my email is bhullerm@gmail.com. If you have any questions, you can always email me those questions, and I'll do my very best to answer those. Or I have a room which is on stockwits.com/r/mbhullar, which is my first initial and last name, right? So it's free to join. Some of you who actually follow me on YouTube are actually members on StockWith. All it needs is a Twitter handle, and it's a room where we have discussion. I post charts, I post some sentiment data, and just sort of my general sort of impression of where the market is going, right? So I just put together a couple of slides. Hopefully, this will help you for those of you who are relatively new to trading, or those who have questions on how to size your trades properly, right? So as I mentioned earlier, so one of the first things you need to do before you actually take a trade, right? Especially if you're a short-term trader, you need to understand what your risk profile is for this trade, right? And the risk profile can be based on a number of different factors, different techniques, and this is not all encompassing, but it gives you a general idea, right? So one of the first things you could say is, I'm going to purely based on a dollar amount. And I actually do a combination of some of these, right? I don't always follow one or the other, but end up doing a combination or a pick one of these, right? So the dollar amount to me ends up being the most common criteria that I end up using. So let's say I don't want to lose more than $800 on this trade, or $700 in this trade, or it could be a bigger or a smaller amount depending upon what do I have in place. Is it a stock trade that I have in place? Am I doing an option? If I'm doing an option, is this option a weekly option, or this option is based 3 or 4 months out? If this option is based like 3 or 4 months out, I'm going to give it a little bit more leverage, right? Because that's the whole idea. I want to give myself some time. That's why I bought an option 4 months out. But if I'm playing like Amazon, let's say the contract is costing me $2,000, expiring in 1 week, so I'm not going to take a 50% haircut on that particular trade. So I have to decide, what am I willing to lose? Am I willing to lose 300 or 400? If that's the case, then I'll take it off at $400. Now, do I put a stop loss if I'm using options? The answer is typically no, because the stock tends to be, the options tend to be very volatile, and there's like a huge difference between the bid and the ask. So I'll usually track that option as if I'm tracking a stock, and I look at the actual value, and if it is dropped sort of below that threshold, which I can do by setting alerts on the chart, I will actually take that off. And last, you can use a technical stock, which is based on pure support and resistance, right? You can draw pivot points, and you say, all right, if it goes below this point, then that's what my stop loss is. So that's like a couple of options for you guys. Now, a couple of you asked me, so what do I do when it comes to options? And honestly, at least as far as I'm concerned, I don't have sort of one easy answer to it, right? So we'll take a look at a couple examples. Hopefully that'll help you out. Let's say you trade a stock, which is very close to where the strike price is, and let's assume the delta is close enough to 50, which is normally the case. And you paid 3,000 to buy 10 calls or puts, and clearly this is an example, right? I mean, it would vary on a number of different things, right? How much time do you have on it, how volatile the stock is, and theta decay and delta, and so on and so forth, right? But just for discussion purposes, let's assume you put in 3,000 for 10 calls, right? And you say, well, I'm willing to take a 50% stop loss on this. That's my max that I'm willing to lose. So in this case, you would say, all right, if I lose $1,500 out of this trade, right? Now let's take this a little bit further, right? But well, another way would be I buy something which is of a lower delta. It could still be this same monthly strike, but same month expiration, but a lower delta, and find something where I invest 1,500, and in that case, I'll say this 1,500 can go to zero. So in effect, you're still risking 1,500, right? So you could actually make that choice. So some people, when they use options, they say, I'm going to put in the amount that I'm willing to lose. That's one way of doing it. I rarely play it like that because I most often end up taking options that have a delta of 50, right? And so I usually put a dollar amount that I'm willing to risk on that particular trade. So hopefully this sort of helps you on how you can trade when you're doing options, right? So the last and the most important thing is the market conditions, right? So I mean, just stating the obvious here, and you guys are well aware of this, that I mean, when you have extreme volatility like the one that we've had for this last 1 month, you obviously need to trade small, right? I mean, if you typically trade a lot of 1,000, then you have to maybe cut into half or even a quarter, right? Because you see the kind of fluctuations in the market, right? The Dow is up 500, right, beginning of the day, and it ends up 200 to 300 points down, right? And in that case, you're up a lot and down a lot, and you need to be able to stomach this kind of a volatility. And I know if you're trading, right, on a shorter term basis, you don't want to be assuming all these risks in the market, right? So for me personally, I rarely trade against the market, right? If I'm trying to trade on the long side, I look for the market conditions to be in my favor, and for that I look at what is called the market internals, and I'll show you a quick example of that. Now, clearly, there's some stocks that are defensive in nature, right? So, like for example, in the market conditions that we have today, you'll see stocks like Kimberly Clark, Procter and Gamble, which are consumer staples that are doing well. Some of the big pharma is doing well as well, like Eli Lilly, Abbott Labs, J&J was doing well, till they actually had this bad news last week. Some other examples that are doing well are some of the real estate REITs, which are called REITs, REITs, right? Real estate investment trading funds, right? So good examples of these are AMT or CCI, right? Some of these guys actually provide the infrastructure for telecommunication companies to host their antennas and so on and so forth, right? And so with REITs, the thing is that they have to return 90% of their taxable income back as dividends, right? So even in a bad market, you're getting a hefty dividend, and even if the stock price goes down, you still have a little bit, downside protection with these REITs, right? But anyway, so there's a separate list of stocks for that. And last but not the least, so what do you do if you have a big loss, right? And if you're down $15,000 or $10,000, the easy way of recovering is not trying to play big, right? Because put yourself in further risk. The way to recover a loss is, do a bunch of smaller trades, right? Multiple of those to try and get back to even. Okay, so that's sort of just some general comments I had, right? So now let's look at what you can do to size your position, right? It's a very simple, you can call it the stock calculator spreadsheet that I created. So let's assume that your initial account balance is 50,000, right? And obviously you can change it to whatever your, current investment account is, right? So let's leave it at 50,000. And the maximum loss on the portfolio that you're willing to take is 1%, or let's just say 1.5 here, right? So if you're willing to take 1.5% loss, then the maximum loss that you're willing to take is $750, right? Now let's assume the stock that you're interested in has a price of 50, and now on the stock, right, what is the maximum loss that you're willing to take, right? A general rule of thumb, again, there's no hard and fast rule, but let's use 7-8%, which is something that the Investors Business Daily recommends. So let's assume you want to use 7%. Then the maximum dollar amount that you would put a stop loss, right, is $4. So then it automatically calculates the number of shares to trade, right? So you would calculate 100, you would buy 188 shares, and the total amount you would commit is 9,400. Again, so this is adjustable, right? So let's assume you take 70,000, right? And you want to take no more than 1% on your stock price. Then you're going to take 700 as your maximum risk, and let's assume that this is a $30 stock, right? So an 8% loss is almost $2.50, and the number of shares you would trade is 292, and the total amount of dollar the amount of dollar amount you would commit is 8,760. So, okay, so very simple, basic, calculations that you can, make using this spreadsheet. I'll figure out a way to upload this spreadsheet on the alongside the video, so you can just download it and use it, right? Okay, so right, let's take a look at what I was talking about, which is the market conditions or market internals, right? Yes, of course, I didn't build this, right? This is actually from shadowtrader.net, right? And these guys have built what they call a quad, right? And so the first thing you look in the quad is what is the number of advancing issues versus the number of declining issues. And so here you can see in an easy fashion that on the NYSE and on the NASDAQ, what exactly is happening under the hood at any given point in time in the market, right? So today clearly was a trending day, trending in the downward direction, because for NYSE, we had for every one stock that was up, 6.5 stocks were down, right? And likewise on the NASDAQ, for every one stock that was up, almost six stocks were down, right? Now, if you have what's called a neutral day, or the market is behaving in a normal typical fashion, this ratio would be say 2 to 1, right? So anything that is within 2 to 1, right, I consider that as a neutral market. So it's neither bullish nor bearish, right? But once it starts to go beyond 3 to 1, 4 to 1, 5 to 1, and in some really uh, trending markets, one way or the other, you will see this ratio up to 8 to 1 as well, right? And so when you see these conditions, one thing is obvious, right? That this is not something that I'm going to trade on the long side, right? Even even if the even if the stock that I like to trade is doing well, in most cases it will get driven by the market conditions, right? And we could also look at what the up volume and the down volume is, right? So in this case, what it shows you is that 86% of the volume, right, which is the down volume, was actually flowing in issues that were declining today, right? Only 13% of the volume was flowing in issues that were advancing. So once I have this data, right, it's pretty obvious that whatever I'm going to do is actually going to be predicated on the short side, right? And this is trend, which is basically based on the number of advancing issues, the number of declining issues, the up volume and the down volume. And you can create different variations of it, and you can look up the formula for this, and it's pretty straightforward, right? So in this case, you're looking at the difference between the number of advancing issues and the number of declining issues. So I think there's about 2,900 issues on the NYSE, and you can see about 1,700 of those issues were declining, right? So that gives you a fairly big clue that the market is actually in a big downtrend, right? The third thing you look at is what's called the tick chart, right? This is for NYSE, but you can also look at for Nasdaq, right? And so this basically is looking on a 15-minute bar chart of issues that are ticking up versus issues that are ticking down on the New York Stock Exchange. And usually it's hard to make out by just looking at this, right? So what you want to know is how many of these ticks are actually closing above zero and how many below zero. So you can see these little green triangles on the top with the red at the bottom, right? So when it's at the bottom, the actual tick closed below the zero line. For me, it's still hard to, still evaluate this. So what I have is an histogram, and this is a piece of code that I bought from shadowtrader.net, which I personally have found very useful, right? So I'm not making any recommendation to you to go and, buy this because I have no association with these guys except for the fact that I liked reading their commentary, and this is something that I've actually learned out of these guys. So this histogram is a clear sort of representation of what's going on in the market, and this starts to accumulate each morning, right? So this is not accumulating over weeks, but it's just accumulating for each week. So if you look at the day today, right, on Friday, the market actually started in the upward direction. So the histogram was positive, and then for the rest of the course, and this tells you roughly the time, about 8:30, 8:45 Pacific Standard Time, it started to deteriorate, and for the rest of the time or rest of the day, it actually moved in the downward direction, right? So this kind of helps you out to see what the market direction is, and most of the shots that I initiated were way towards the end, right around sort of this area. And this gives you what the chart is for the futures, right? Let me maximize this because I've always found this to be useful. So I apologize. There's a couple different lines. I'll try and do my best to explain this. This green line at the top and the bottom are yesterday's, the previous trading days low and high, right? So these are the two previous, the low and the high of the previous trading day. This pink line is what the overnight high and the low was, right? And why do I mark these? Because these are your typically your natural points where you have support or resistance. This whole area from this red line to this green is value area high and value area low, and this is the point of control. So so what this means is that 70% of yesterday's transactions happened in this range, right, between this value area high and the value area low, and the maximum volume occurred at this price. So 2472 was roughly the fair price of business that happened yesterday, right? So in this case, as you see, the market went up, and I thought it was actually going to take out the overnight low. But what happens is, after one bar, it falls back, right? And whether you want to take a short here or not, that's again up to your trading strategy. But at least it makes me a little bit cautious in terms of what I want to do, right? So you can see for the rest of the day, the market came down, and the interesting part is it really hovered around this area, which was the low of yesterday, previous day's low, right? And the market, if you, I was watching it because it was chopping around and not taking one direction or the other. Now, why I took a short was because just basically because of the market conditions, right? Now I looked at some historical trends which said that over the last several weeks, Friday was one of the worst day where the market lost about 0.9% on an average. Kind of makes sense because there's so much uncertainty in the market that people don't want to hold things overnight, right? So I was actually watching this area for a break, and once it's broke, I actually took a shot, right? And I covered it right here, and it was obvious these are not something that were plotted after the fact, but these are things that are provided by shadowtrader.net. They have a little study which is called the value area pivots. What you do is each day you have to enter this value, the value area high, the point of control, value area low, and the pivot, and this is available on shadowtrader.net. Once you draw these lines or you input these values, and automatically draw these pivot and support points, right? And something interesting that I noticed over the last couple of days, at least 3 days in a row, the market each day it dropped to roughly the S2 level and almost to the tick, right? And that shows sometimes how mechanical the trading is, right? I mean, if I mean, clearly there was selling happening, but this trading was so mechanical that it stopped right here, and that's exactly where I took my trade off. Right? Didn't make it wasn't like a big trade; it was like maybe about $450, but it was a nice trade in about like 30, 45 minutes. That was sort of the um, positive trade I had, and I did lose some money in a couple other trades, and that was mainly because I sometimes deviate from the rules as well. Okay, so that's something that you guys can download. You can look for the quad on shadowtrader.net, and if you need the histogram, that of course you would end up paying, and I forget the price, but I thought it was less than $100 when I bought it, right? And lastly, what I'm going to show you is, so I have, what I've developed is this, indicator called the MSB underscore ultimate indicator, which helps you trade based on an automated algorithm that, I've developed over several years, right? So again, see, these are some of the market conditions that I've incorporated as part of the code now. So I don't have to look at the market internals. So I can look at it here very quickly for any stock. I mean, on any stock, this will not change, right? So one of the things you notice is that yeah, the market is negative. This is something called the market thrust, which is a variation of the trend methodology. So it's based on again those four parameters I talked about: advancing issues, declining issues, up volume and down volume, right? So wherever the market thrust is positive, that means more issues are advancing, or there's more volume flowing in up issues versus down issues, right? So clearly in this case, it was negative, right? And as you can see, it is -6, which is substantial, right? And then again, this automatically calculates how the trade ended up being, right? But we can look at we can look at SPY as an example, and these are all, this is I'm looking at the day chart, right? And in this case, the short was initiated, a couple of days back at about 261, and this still hasn't closed and given you a profit of $18, right? And we can look at Qs as well, and just ignore some of these trend lines. This is sort of more for my benefit, right? And because I typically try and track what some of the key support and pivot points are, right? And in this case, you have a profit of $6.09, but you can look at it on different time frames as well. You don't necessarily have to trade these on a daytime frame, right? So in this case, on a 30-minute chart, it was actually initiated on Wednesday at 11:30, and I typically wait once the signal comes. I wait for the low to be taken out, right? Once the low is taken out, then you enter the trade, and this has been a short trade. Now, have I kept it? No, I haven't. I closed the trade mainly because of the fact that I'm trying to go flat over the weekend, right? We can look at other trades as well and see how they performed. And So this one actually, just on a 30-minute chart, it just went short. But let's look at how it did on the day chart, right? And once it calculates, it'll come back. Yeah, so it actually uh, initiated a short here, right? And so we would take it at this next bar. So this has been profitable by about $13 as well. Anyway, that's all I wanted to share with you. I will upload the spreadsheet for you guys to use, and I hope you guys find some value out of this. And good luck. And if you have any questions, feel free to ask me in the room that I listed, and I'll post the link again in the comment section as well. Have a wonderful weekend.